Hi everyone, welcome to the Mighty Trades channel. My name is Johar and welcome to another episode of Weekend Technical Analysis. So last week we concluded our episode with Aditya Birla Fashion. So let's not waste any more time and dive right into the market. So let's start with Sundaram Finance. So this stock has corrected massively since making this high back in February last year. It's corrected by about 36%. It's testing its pre-COVID highs. Oh, sorry, its pre-COVID high is around here. So it's currently taking support at this zone, which is here at 1958, which was a resistance back in Jan 2018. And it's taking support over here, which was a breakout of its pre-COVID high. So let's see if it manages to stay above here, above this level. Otherwise, if it breaks this low that it made in the previous week, we can see a further fall, which will not be great. Let's quickly take a look at the financials of the company just to figure out if we can make like a contrarian buy over here. So Sundaram Finance, okay, book value is good, PE is great, ROC is good for a finance company. Let's look at the quarterly results. Quarterly results look stable over the last you could say around 10 quarters. The results are stable. Margins have improved. Net profit is highest ever net profit, 289 crores, except for this one. Let's look at the trailing 12 months. Then yes, this is the highest ever net profit that they are reporting right now. And if you look at the shareholding pattern, wow, we don't have the shareholding pattern beyond September. Okay, let's take a quick look if we can find the shareholding patterns somewhere else. Sundaram Finance. Let's see if Economics Times is updated. Okay. How do I read this? Till when is this updated? Okay, so here it's showing 12.43 as foreign institutions. And over here it was at 11.42. So it looks like the shareholding of FIIs has gone up. Promoters is the same, FIIs have improved. Mutual funds are 7.63. Okay, so here we only have DAII. General public is 27.2, and that was at 40.96 here. I can't seem to understand this Economics Times. They have the presentation is really bad. Let's see on trend line if it's any better. Okay, yeah, this looks better. So the promoter holding is stable. The historical mutual fund holding has gone up, which is good. The FII holding has dropped by a little bit, not much. So these are good signs. There's not a lot of selling by FIIs and DIIs here. Now, okay, so we have a better view available here. Alright, so the FI holding has gone down just by a little bit. DI holding has improved. Public holding has pretty much remained the same. So there's no real action going on over here in this company. Stock price is falling. Currently no bullish trading opportunity that I can see here. So let's quickly move on to the next one, which is RUCHI Soya. Again, no real pattern here. It moved up very sharply during the bull run in 2020, then corrected equally sharply again, then again moved up, and now it's just slowly on a downtrend. So nothing to discuss here. APL Apollo Tubes looks very nice. So this stock has been consistently outperforming the market since a very long time, all the way back from the bull run. I mean, what returns, right? Superb returns that the stock has given. So if we draw a support trend line here, then this looks like a nice support zone. And this would be, if anyone wants to take a trade in this would be a pure momentum play. I do not see any chart pattern that's developing as such. Let's switch to the line chart to see if there's anything we can spot. Okay. So as per the line chart, this looks like the support zone. The stock. One good thing is that it's making higher highs and higher bottoms. Each bottom is higher than the previous one, and each high is higher than the previous one. That's good. Let's switch over to the daily chart to see if we can spot anything. Switch over back to candles. Yeah, there's no chart pattern that I can see developing. But if I'm not wrong, Apollo Tubes is somewhere related to the steel sector. Yeah, branded steel products manufacturers. So this could be the beneficiary to the rising steel prices that are happening right now because of the war in Russia and Ukraine. Because of the war in Ukraine. So this could potentially see a run up, but as of now, there is no pattern to really calculate the target. So I'm gonna avoid this trade. Moving on to SYNGENE, nothing really happening here. Stock's been consolidating for more than 1 year now in this price range. So nothing really to, no real trading opportunity over here. Let's move on to GICRE. Okay, so this stock has been in a downtrend since 2018 and it's currently available at close to its most recent low right now. And this looks like the resistance line. This is the clear resistance trend line that's been following, and it's very close to its bottom. The bottom that it made in the COVID fall was approximately, let me zoom in, was here around 90 rupees, and right now the stock is available at 118 rupees. So there's no bullish trend. It's been in a complete downtrend since the time of its listing. Let's try and look at the financials to understand what's happening in this stock. So it's trading under its book value. That is a very good sign. Intrinsic value as per screener is also good. Very undervalued compared to its peers. If you look at the quarterly results, they haven't really improved. They're stable, but there's a lot of back and forth in the results. Some months it provides extremely good profit, then the profit goes down, then goes up, and then it remains stable here, then all of a sudden it went up again. So not really sure why the business is not stable. But if you look at the net profit on a year-on-year basis, it's been producing profit consistently except for March 2020 right here. And if you look at the balance sheet, then their reserves are consistently going up. That is also a good sign. And if you look at the shareholding pattern, I believe this would be a government entity, and yes, it is, which sort of shows why there is a lack of interest in the share price. So right now it's completely in a downtrend, in a total bear phase, and every time it comes to test this trend line, it gets sold off. So unless we see this trend line being taken out, we can't really take any positions in the stock. Moving on to Bata India. All right, Bata India Alright, so it broke out from its pre-COVID high, which was here back in Jan-Feb 2020. It broke out and moved up all the way till 2245, and now it's coming back down and retesting the same levels. So as of now, again, there is no chart pattern and it seems to be in a downtrend. If it stays above in this zone, which is the COVID high, then that's a very good sign. Otherwise, currently there is no bullish trend that we can see. It needs to break above this level, break out above this level, and then we can probably see some bullish momentum there. All right, let's have a quick look at Indian hotels. So Indian hotels is again trading at a lifetime high right now. It looks like it's forming a bullish pennant. I think we'll be able to better see this in the line chart. Yeah. So this is a bullish pennant that it's sort of forming as per the line chart. And usually the target for a bullish pennant is, it's like very similar to a flag and pole, where if it were to give a breakout above here, we could see a potential target of close to 34% immediately. Let's switch back to candlesticks. Let's look at the monthly trend over here. So it's clearly trading at its lifetime high right now, and it is consolidating at its lifetime high, which is a very good sign. And it's forming a nice bullish pennant. It's consolidating in a tighter range, so we have to wait for it to break out above this zone, and only then we can get a potential trade here. So let's say if it were to break out, so if it were to break out from here, the logical stop loss would be around 200 rupees. So let's take a note of this on our chart. But for me, the comfortable breakout level would be somewhere over here, about 222. So it needs to break out of the trend line, and then it needs to give a close above 222 rupees, and then we would see this target coming up. So if you were to take a long position over here from this price point, and our stop loss would be this trend line. So that's a gain of close to 25% for a risk of 6 to 7%. This is the potential trading opportunity that we can get from Indian hotels. So let's quickly go ahead and note this down in our tracker. So today's day is 13th March. The price is 203. Bullish pennant pattern. The target entry price will be 222. Potential target is 280. Which is a gain of 26%. Our stop loss is going to be about here, which is 208. And we are currently waiting for entry. Okay, let me also put a link to this chart so you will be able to see exactly what I see if you click on this link. All right, moving on to the next stock, which is Endurance Tech. Oof. Okay, so this has had a very deep correction clearly. Yeah, no point of, wow, to 40% correction. Uh, I have done a little research about Endurance Technology previously also. Fundamentally, it's a very, very good company. It's very good. It's a manufacturer of some auto parts. But currently, I believe because the auto sector is not doing well because of the rising commodity prices, and also, there's this chip shortage going on. They have a lot of supply problems. So I believe there is a good chance that, auto companies might not do well. And if auto companies don't do well, then the auto ancillary companies which produce parts for the auto industry won't do well either, which is why we are seeing this sharp sell-off in the company. But if we look at the results of the company, the profit and loss has been consistently going up, right? Their sales have been going up consistently. Their margins are still maintained. In fact, they have improved if you look at it. And so has the net profit, right? The company is posting its highest ever net profit uh, since the last couple of years now. Since the last 3 years, it's been posting, the last 2 years, it's been posting its highest ever net profit. So this is a good sign. And if we take a quick look at the shareholding pattern, we can clearly see why the stock is on a downtrend. The FIIs have been on a constant selling spree, as we can see from here. Good thing is domestic institutions are not selling, they have increased their positions. The public holds very little of the company. So this does look like a good investment opportunity right now. So you could potentially start building a small position here from an investment point of view, because even if 1 or 2 years later things go back to normal, you could potentially get a 60-70% gain in this stock. So this is a good investment option right now for anyone to buy. But if you were looking to get a trading opportunity, the trading opportunity would only be possible if it gives a breakout above this recent swing high here. So it needs to give a close above 1500 rupees, and then you can possibly see a rebound in the share price. But as of now, this is a good price point to enter. I think it should take very strong support here because this is the pre-COVID high, and it also consolidated here for a very long time and then it gave a breakout. So this zone should act as a good support. So any investor who wants to invest in this, I think this is a good time to invest in this stock. All right, let's go over to Ramco Cements. Again, huge fall. Any bullish trade would only come after breaking out, after if the price moves up beyond this line. Otherwise, there's no trading opportunity right now. Let's go to Pfizer. Pfizer also not doing great. However, the pharma index has been doing pretty well over the last 2-3 days. But right now, the chart doesn't look anything great and there's no pattern developing. Let's go over to NIACL. Again, chart was in a downtrend since 2018 and now it's just consolidating in this price range. So here, until and unless it breaks out of this, I would say box. This is the box that's been trading in since a very long time. This box has been in the making since 2019, since March 2019. So the price entered this box around here, tried to move up, then fell down sharply, then again moved up, consolidated here, then again this was the COVID fall, then it just consolidated here at the bottom, then again came back up and tried to retest this price, this resistance zone. and then again it's been now consolidating, and now it's back in a downtrend, and it's back to this previous support zone right now. So one strategy is that you could buy it somewhere here and then hold it for this target, which is not a small target at all. It's 68%. That is one strategy you could go with. Or the second strategy is that you could wait for it to break out of this box, and then you could hold it for all-time high targets. Now, NICACL is a government company, so just keep in mind that before you make any investing positions over there. And as like all government companies, the book value is solid and the price is trading under the book value. So a lot of our government stocks or our PSU stocks are very undervalued compared to the book value. And you will look at the results, it generates consistent revenues. The margin has really gone down in the last previous 2 quarters. In December, the margins picked up a little bit. I don't know why the margins went down so much. But if you look at in terms of net profit, they're getting good net profit here. And if you look at the trailing 12 months, the net profit is again, it's very fluctuating. Like there's no consistency in performance. That's what really bothers me with PSU companies. And if you look at the shareholding pattern, most of it is owned by the government of India. There's very little public holding in the stock. So there's a very high chance that any operator could take a position here. They would just need like 0.25 or 0.5% of the shareholding, and they could make the stock price bounce wherever they wanted. So that's the view on New India Assurance Company. Let's move on to Imami Limited. Imami Limited is also in a downtrend. Nothing really great happening here. Yeah, there's nothing happening here. So let's move on to KPR Mills. Wow, just look at this stock. This is brilliant. Brilliant stock. Just look at the run up from the COVID low of 61 rupees all the way till 700 rupees. That is more than 10 times the return. Brilliant. And another thing that I'm noticing is that it's not corrected as much as Nifty. Um, in fact, the last 2 weeks it's been consolidating, or the last 3 weeks it's been consolidating in this price range. And I think it's getting ready for an move because the volumes are also really good in this consolidation zone. So you could potentially see um, a very short-term trade over here, and this is what we call a water slide trade. So if I draw this, you see here the price is sort of taking a slide, and this is called a water slide pattern. And now let me switch over to the daily chart where you'll be able to see this more clearly. So as you can see, this is like a water slide that's been making, and the chart needs to give a breakout. I would say somewhere above this box. Okay, and if it does give a breakout, all you have to do is buy it at this breakout and sell it at the most recent high, which is here. So you could potentially make a 10-12% gain, and this would be a very quick trade. This would not take more than 3, 4, 5 days for this target to get achieved. This is called a water slide strategy, where the trade duration is extremely short term, and the price is sort of making a small rounding, and this basically is a signal that the price is just going to go up like this eventually and retest this high. And when it touches the high, you should exit, because we don't know if it will take a resistance here and bounce back down, or to break out. We are not sure about that, so you should ideally just sell it off over here. But the stock is in very strong momentum. So if you look at these okay, let me go over to the daily chart again, and let's look at the moving averages. Yeah, so as you can see from the moving averages, the stock is in a very strong momentum. It's constantly coming and touching its 50-day moving average, and it just moves up, right? Now this has been happening since the COVID fall, since July 2020. The stock has been constantly above its 50-day moving average. However, that seems to have changed this time. This time the price has gone below the 50-day moving average due to this war-like situation. It's taking support at the 100-day moving average. I believe the stock might consolidate in this zone for some time and touch the 200-day moving average over the next 1 or 2 months, and then we might see a further rally. So until and unless it gives a breakout above this previous swing high, above this box, uh, there will be no bullishness, and it could potentially just consolidate here and hit the 200-day moving average and then go up. So that's the view on KPR mills. Moving on to Tata Chemicals. Let me turn off the moving averages. Yeah, so if anyone wants to invest in this stock, then this is a good time. But there's no real trading opportunity here. It's making lower highs and sort of lower lows. Right now, I don't see anything to be bullish about in the stock. Moving over to IEX, pretty much the same thing. It's a good time for an investor to enter the stock because the Indian Energy Exchange is sort of a monopoly in the exchange business for energy contracts, and the stock has split also recently. So I think this is a good time for an investor to get in, but there's no trading opportunity right now. Fortis also seems to be consolidating in this price range. Nothing's really moving. It's standing still for the last couple of months. It's been consolidating in this price range since August 2021. So right now, as I said again, it's there's nothing happening in the stock, and it's constantly retesting this previous high of 2017, right? Potentially, it could have made a double bottom here, and it could move up again. It could move up back to this previous resistance, but until unless it gives a close above 310 rupees, then there is no you can't see any bullish momentum until then. Whirlpool right now isn't a good price to invest the stock in, but I believe this stock is going to underperform the market for a considerable amount of time, maybe a year or two, because of the high inflationary environment. Because Whirlpool is dealing in an industry of consumption. People might not buy new fridges or ovens or anything else. They might avoid buying new appliances because of the inflation, and obviously their raw material cost is going to increase because of the cost in steel and copper and other commodities that they use to manufacture their products. So because of that, they might see an underperformance in the share price. However, from an investment point of view, this is a great price to invest in. It's available at a price. It's currently trading at a price where it was trading at back in Jan 2018. And if I show you the financials a little bit, you will understand why this is a good investment opportunity right now. So let's take a look at the quarterly results, or let's take a look here. If you look at the profit and loss, in March 2018, their sales were 4,800 crores, the net profit was 351 crores. Now their profit is at now their sales of the last trailing 12 months is at 6,000 crores. But as we can clearly see, the rising commodity prices have taken a hit on their margins, and we can clearly see that margins have dropped, and the net profit is at 267 crores. So I believe that for the next 1 year, this stock might underperform because they will need some time to increase their prices at a place where consumers will be willing to pay for those products, and then once this operating margin comes back into place above 10%, then we can see an up move in the stock. So the company is growing, their sales are growing, margins are taking a hit, which is why you can see that the share price is also taking a hit right now. So that's the view on Whirlpool. An investor should invest in the stock at this price, start building small positions from a long-term perspective. Moving on to Coromandel, nothing happening here, consolidating for close to a year now. In fact, for more than a year. This has been consolidating at this price since July 2020. So no real trading opportunity as of now. Solar industries is looking interesting, but I don't see any clear chart pattern for me to take advantage of, and seems to be testing this support multiple times while the lows are getting lower. So let me switch over to the daily chart. There is a very high chance that it might break this support over here. And if you look at the moving averages, then yep, the 50-day moving average has crossed below the 100-day moving average. The 200-day moving average is catching up. So if this stock were to break this low, we could see a further downfall till this level here. So currently we have to wait for it to give a breakout above this resistance line and give a close above 2600 to confirm some bullish momentum in the stock. As of now, we have to avoid. All right, moving on to NAM India. Stocks in a complete downtrend, nothing to talk about. And the chart also looks very weird. I don't know why it's showing minus 272. Yeah, I have no idea what this is. Okay, moving to Rajesh Exports. This is strange. Rajesh Exports, as far as I know, is a gold exporter. And if gold prices are moving up, Rajesh Export share price should also move up. So I'm not really sure why this stock price is moving down. But as of now, it's in a downtrend. Nothing really to discuss. If we look at it in a line chart, we can clearly see that there looks to be a head and shoulder sort of formation over here. This is the shoulder, this is the head, this is the shoulder again, and the stock price has corrected. If we are to calculate a target for this, then the price has almost reached its target. So I believe this might be the end of the correction. This price also looks like it could be taking a support at this resistance here. There might be some more downside left. Not too sure about that, but currently there is no bullishness in the stock, so we will only enter the stock if it gives a closing above 885. Otherwise there's nothing else to discuss. OIL. Okay, let's see, I've done some drawing already over here. All right, so this price where it currently is, since 2009 it was taking a support at this price. Then a breakdown happened in 2015, and the price went down till here. It went up uh, above this support line, which has now become a resistance. It went up and broke out of this resistance in 2017, again went down, again broke out, and then again went continuously down and made a low of 68 rupees. Now the price has again broken out of this resistance, went down, and it has again come out of the resistance. Now this potentially could be a beneficiary of the rising crude oil prices. So this will be a very commodity driven stock. As long as the oil price stays up, the stock price will stay up. If the oil price comes down, this will also come down. So because of that reason alone, I would avoid this stock, because you never know what will happen, because the crude oil prices are also moving up and down because of the news. If tomorrow Russia goes ahead and bans oil exports to some place, or if EU stops taking oil from Russia, that could send oil prices skyrocketing and the stock price also skyrocketing. So I'm not really too sure how I would be able to control that position, because we only look at our charts once a week. And since we are not active traders, it's better to stay away from these kind of stocks. And we should only stick to stocks where we can build a safe position with a good margin of safety, and then make our positions in those kind of stocks itself. So let's move on to Thermax. So something interesting seems to be happening at Thermax. If you look at the volume, just look at this volume that's been happening over the last couple of months. And this volume is consistently rising, right? So definitely something's cooking in this. Let's take a quick look at the financials to understand what's happening. Okay, so clearly the stock is very overvalued compared to its peers. It is in the business of energy, environment, and chemical sectors. Okay, so they produce boilers and heaters, absorption chillers, heat pumps, power plants, solar equipment, air pollution, water and waste recycle plant, ion exchange resins, and performance chemicals and related services. Okay, what all of that is, I have no idea. Let's look at the sales. Sales have been pretty much stable since 2019. Here also sales have been pretty much stable. If you look at the net profit, that has also pretty much stayed stable. No real growth in the company as such. If you look at the shareholding pattern, then the FII holding has been stable for the last 5 quarters. The DII holding has also pretty much remained in the 14 to 15 range for the last 5 quarters. Public holding has gone down. That is a good sign. But again, since the last 5 quarters, the public holding has remained at 5%. And if you look at others, that has also pretty much remained stable. So don't really know why this price is moving up, but currently it's trading at its lifetime high or close to its lifetime high. Don't really see any chart pattern here, so can't really understand what kind of targets we can expect. Um, but there is something seems to be cooking because this volume is promising here, but I'm not really sure uh, about the targets that we can get here. Better to avoid such a stock. If someone wants to play from a momentum angle, it could be a good place to take a position, because if you look at the moving averages, it's trading very close to its 50-day moving average, just above its 100-day moving average, and also above the 200-day moving average. And also, if you look at a very interesting chart pattern that developed in the past, all these three moving averages converged at one point over here back in November 2021. And when this convergence happened, the share price just shot up. Right, as we can see from this point of convergence, the price moved up by 32%. In what? How many days? Just 1, 2, 3, 4, 4 days. It took to move 32%. Potentially, we could see a convergence point here, because because the market is in such a phase right now. I don't expect a stock to become extremely bullish in this type of phase. So it could consolidate in this price range for a couple of months, and then all these moving averages could potentially converge. And if that does happen, then as a trader, what you should do is you should mark a breakout point here, right? So for example, this was the convergence point, and this is the clear resistance trend line that we can see. The moment a similar convergence happens in the future over here, you would need to mark a resistance line, and the moment that resistance is broken out, you have to take a position for a quick 10-15% gain. If you get that quick 10-15% gain in 1 or 2 days, get out of the stock and be happy with what you have made. And that is the advice that I would like to give on this stock. All right, moving on to the next stock, which is Grindwell Norton. Okay, let's see here. So this stock, wow, this stock has also pretty much more than doubled from its pre-COVID high. That's a good sign. The um, the higher high and lower low is still intact of the stock. It's not broken its previous low that it made here. So that is a good sign. You could potentially see this trend continuing for a considerable amount of time. But as I said, since we don't have any chart pattern really backing up, and so because this is more of a momentum play, you could ideally take a position in the stock above 1970 rupees, and then that the previous low, which would be somewhere around here, maybe this would become your stop loss. So from a momentum angle, you should take this, but also you should play momentum only if the benchmark index, which is Nifty, if that crosses the 200-day moving average, if it breaks out above the 200-day moving average, then momentum theory will work. Otherwise, there's a very high chance it might just go up here and take a resistance and come back down again and consolidate in this price range. Moving on to Linde India. Okay, Linde India is at a very important price juncture right now. The stock has not corrected at all compared to the benchmark index, and it's been consolidating in this price range since September. And it looks like it's made a double bottom here. It could potentially break out of the zone very soon, and we could see a huge up move like the one we saw over here, right? This was a massive up move that we saw in the stock. Let's put up our moving averages here, and as we can see, yep, the stock is trading above all of its moving averages, and we could see a large up move in this stock. So this definitely looks like a promising trade, and for me the best way to calculate the target would be this. All right, so if we get a breakout above this price, let's move it up to here just to give us more margin of safety. Let me remove this. Let me recalculate that again. There you go. Okay, so we can potentially get a gain of close to 24 to 25% in the stock if we get a breakout above this price point of 2945. Our stop loss will be very clear. The stop loss in this case will be, let's put up the long position. So right now I think a 5% stop loss looks decent enough, but the actual stop loss I think will depend on the breakout candle. If we get a strong bullish engulfing candle, then the bottom of that candle will become the stop loss. But right now for updating our sheet, we can keep a 5.5% stop loss for this trade, and we needed to break out above 2945 and sustain that breakout. So let's quickly put a note on this. And one interesting fact about Linde India as to why I believe this stock should move up is because they are one of the pioneers in hydrogen fuel. So that is, I think, something really good for them going on, because with this whole Russia-Ukraine war, um, there is a very strong push now towards renewable energy again, because most of the countries now don't want to depend on other countries for their oil exports, because everyone I think has realized how difficult a situation can become if you are too reliant on the oil industry or countries that are producing too much oil. You really become dependent on them and you can't really take harsh actions against them. So I think because of that, they would have this might get a huge push. There could be a lot of export come in, or export or business that might come into these guys. India itself wants to move towards renewable energies, so all of this I think is a positive sign for the country, for the company, and in the short term you could see good price movements in the stock. Okay, let me just paint this format for a couple of those. So pioneer in hydrogen technology, rising crude prices are a good thing for the company. Are a good thing for the company as it puts other renewable sources of energy in the spotlight. Very close to breakout, has not corrected one bit in the market fall. So these are the things that make the stock very strong for me, at least. All right, so moving on to Godrej Industries. Wow. Yeah, so large sell-off, currently taking a support at this price zone. Yeah, I don't really see any bullish opportunity right now. Could be a good price for investors to get in, but currently nothing happening here. Bank India. So since this is a PSU bank, I think there might be a good chance this is trading under its book value. And yeah, it is trading under its book value. Its book value is 114 rupees. The current price is 50 rupees. So it's trading more than half its book value down. That is a good thing. So if you are a deep value investor, then this is a good investment opportunity per se, because you could potentially hold it till its book value. And one of the things that's been happening is that the government wants to do a lot of divestment. There is a very good chance that over the next 1 or 2 years, all of these banks will become privatized. And if it does, the government is not going to sell these banks to private players at a loss. They will at least want to sell them up to its book value, right? Because these are the assets that the bank has on its books. It makes no sense for the government to sell it at a discount of more than 50% to the private players. So there's a very good chance the operators might take the share price up till the book value and above, uh, so that the government can get a good price for divestment. And if you look at the shareholding pattern, FII seem to have sort of increased their position over the last 2 quarters. DIIs have taken increased their position over the last 2 quarters. Public holding is very limited, but that seems to have also gone up by a very small margin. And the promoters, the president of India, they have sold some stake, around 8 or 9% of the stake they have sold. I think most of it has gone to the DIs and some has gone to the public. So it's a good value investing opportunity, and you should only buy the stock if it gives a close above this trend line. So ideally, if it gives a close above this, which is 59 rupees, then we can see a bullish move all the way till potentially this price, which is 100 bucks. So that would give you a gain of close to 100%. Yeah, sorry, 70%. So you can potentially make a 70% gain. And if they plan to take it till the book value, then this will go up to 93 rupees. Sorry, by 293%. So let me add this to our tracker. I think this is a good value investing opportunity, a good safe bet. So Bank India, the current price is 48.70%. Deep value, trading more than 50% discount to book value, potential government divestment could take price up. Also, one thing that we should notice is that the bank has finally turned profitable last year after almost 5 years of posting losses. The bank has turned profitable. This is also a good sign uh, that the bank has improved its performance. Its NPAs are coming down, and all those problems that had happened a couple of years back because of Vijay Mallya and Nirav Modi, etc. All of those things are being taken care of now. So we have to wait for it to give a nice close above this price point, above 60 rupees. And that will ensure two things. One, it's breaking out of this trend line. And second, it's also breaking out of its previous swing high, which should give you a potential gain. What will be the stop loss? I don't believe you need a stop loss in this stock because it has already corrected so much. It is literally at the bottom of its price. I really believe that this stock will go to its book value, and you could potentially make a lot of money in this target. Okay, so the entry price is gonna be 59 rupees. The target that we will keep is, so we are not going to keep it till the book value. I would like to exit it out here only with a good 70% gain, which is 100 rupees, a nice round number. The stop loss, there's not going to be any stop loss in this case. We are waiting for entry. The current market price is 48.65. All right, so let's see what happens here. Okay, let's quickly move on to our next stock, which is CRISIL. Whew, okay, so it is consolidating at close to its all-time high levels, but it's a very slow moving stock. I mean, just look at this. Let me move over to the weekly chart here, or let me actually move over to the monthly chart. I mean, just look at this. Just look at it. Consolidates for such a long time, and after consolidating for a long time, it went and moved down, then it go up. Then it went up again slowly, consolidated here, then it went up again. Now it's consolidating again. You have to be very patient with the stock. It does make big moves when it does move in a particular month, but you have to be really patient. And currently, it's in a consolidation phase, so you will have to wait. Let's switch over to the line chart to give us a better idea of the box. Yeah, so you will need to sort of wait for it to break out of this consolidation zone. It could potentially be here for a very long time in this zone. So you have to wait patiently for it, and if it does break out, at that time you will see what chart pattern has developed. Let's move over to the candles stick pattern again. Let's look at Naveen Floret. So Naveen Floret again from the chemical pack, not corrected at all from its high, still very close to its all-time high. This would again be a momentum play. There's no real way for me to see a target for this. But if it does break out above this price point, you can see it further going up again. If someone knows how to use Fibonacci retracement very well, then please go ahead and apply that. I think you will get some good targets for this because the stock is in a good momentum. And if we switch over to the daily chart, you will speak. What we can see is that, yeah, the it's trading close to its 200-day and 100-day moving average. The price is below its 50-day moving average. If the moving averages converge at one point, you could see a very quick and sharp up move of 15-20% potentially. But wait for the breakout to come above 400 and about 4,200 plus, then you can get a good move in the stock. Moving over to Avas Financiers, nothing much happening here as of now from a technical standpoint. Better to avoid this stock. Kajaria Ceramics, again, nothing happening here technically. Stock is taking support here at this consolidation zone that happened last year. If it breaks this, it can fall further down to 700, 600 levels also. Bale is a PSU stock, very slow moving. Uh, don't see any technical performance here. Vinati Organics looks nice. However, it is consolidating in this box since a very long time now, since May last year. So it's close to a year's of worth of consolidation. And if you move over to a daily chart and put on our moving averages, what we can notice is that the price is currently at its 200 moving average. It's currently at trading at all its three moving averages, right? It's very close to all the three moving averages. You could potentially see a big move up or a big move down. So we'll have to see what happens here. From a target perspective, if it were to break out on the upside, you could see a quick up move of 18%. Very quick and very sharp up move of 18% if it gives a breakout. If it doesn't, it'll just keep consolidating here or give a breakdown. So that's the view on Vinati Organics. Moving on to LIC Housing Finance, stocks in a downtrend. Nothing really to discuss. It's not a complete downtrend. Better to avoid. Devyani International, the chart is too limited. Can't really make any view right now. India Mart has corrected superbly. Let's take a look at RSI. The RSI is in the oversold zone. Let's look at the daily chart. So there seems to be a divergence over here. So this is not any trading advice that you should go and buy the stock because of divergence. This is just an observation. You can see a quick up move of 5-10% in the stock because of this divergence. But as of now, the stock is in a clear downtrend until and unless it gives a breakout above 7,000 rupees. Not in 7,000 rupees. In fact, it needs to give a breakout above 7,600 rupees for the stock to come back into bullish momentum. But on the basis of this divergence, this that has been created last week, you could maybe see another 5-6% up move up till 5,000 rupees levels for a quick buck. So that's the view on India Mart. Moving on to Sun TV. Consolidating for a very long time in this price range. Not really moved even a bit. I mean, just look at the consolidation. It's massive, the consolidation has been. So no real chart pattern here. The only chart pattern that I do see is if you look at the 1 year chart. So this looks like a cup with handle that had developed last year. Cup with handle or head and shoulder, whatever you guys want to call it. This is the cup. This is the handle. And the potential target. Let me draw the neckline once. So nice straight neckline. Very good. Alright. So you could see a a target of 48% from the neckline. Okay, now the price is currently retesting the support of the handle. So from here on onwards, you can potentially see a gain of 70%. Now keep in mind that this is a very slow moving stock. So it's good because it's not very volatile, but it's bad because it'll take you like a very long time to achieve this target. But the risk to reward ratio right now is really great because my support right now is really close, right? This will be the support line, 407 rupees. If I am to make a long position currently at this price, the risk to reward ratio becomes really favorable for us. Let's take a quick look here. Let me delete this. All right. All right, just look at the risk to reward. As potential 62%, sorry, even more. Yeah, a potential 67% gain for a risk of what? Just 10.5%. Those are really good odds in my opinion. So I'm gonna put this in the tracker. Just a word of caution though, really slow moving stock. uh, but fundamentally, I know that the company is really great. So fundamentally, there is nothing to worry about the stock. Technically, only there is it's a very slow moving stock, but if it does move, you could see a very fast up move. So cup with handle pattern, strong fundamentals, good risk to reward ratio. So this will be more like an investment because I see this at least taking minimum 1.5 year to get into to achieve this target. So let's see how long it takes. 762. Okay, that is the target. The potential gain is 67%. The stop loss the stop loss will be 409. We are waiting for entry. This is the current market price. Again, this is a fundamentally strong stock. So there is no real so fundamentally the stock is very strong. There's no real need of a stop loss. Even if it goes down, you can hold it. If there are any doubts about the fundamentals, let me just show you the fundamentals over here. All right, so as you can see, screener itself, it's saying the intrinsic value is higher than this. It's undervalued to its industry peers. It has a very superb ROC of 30%. There are very few companies which can generate these kind of returns on their assets. And if you look at the sales, so now the sales went down a little bit in 2020 because a lot of brands stopped advertising on TV channels because they couldn't really sell anything because of the lockdowns, because only essentials items could be sold. So a lot of the non-essential brands stopped advertising. However, we can see that the revenues have come back up. We can see 1,000 crore revenues has come back. Margin is superb, posting very good net profit in the last quarter. If you look at the trailing 12 months, this is the highest ever net profit they are going to be posting at these at the current run rate. If you look at the shareholding pattern, promoters holding 75%, FIs are holding 9% of the stock. 2%, 3% is held over by the DIIs, and the public is holding 13% of the stock. So that's the view on Sun TV on a fundamental perspective. So we are pretty much out of time now. Hope you enjoy the video. Please check the link in the description for my positions link. You will be able to access this Google Sheet and you'll be able to see exactly what's happening about all the positions that we have discussed. Over the last 2 months, we've identified close to 33 positions. So probably next month we will create a video where we'll review all these positions and see how many how many have hit their targets, how many have hit their stop loss, and how our strategy is working. So thank you for watching this video and goodbye.